Joining us now to react to what this means for big tech and other sectors, Dan Ives, Managing Director of Equity Research at Wedbush Securities, Sylvia Jablonski, Chief Investment Officer and co-founder of Defiance ETFs. Good to have you both. Dan, I'll kick it off with you. Big tech has always faced sort of these antitrust regulatory clouds, and yet the stocks don't really move too much on the back of that. And I'm wondering if you think this time could actually be different, that there could be actions in the works.
Yeah, look, I think in some ways the walls are caving in terms of just more and more focus from an antitrust and really focused on M&A, because that's a big part of the growth when you look at the likes of, Facebook, potentially Amazon, as well as other big tech players. But to your point, the reason investors shrug their shoulders is it's the lack of consensus. The bark's been worse than the bite over the years. And if you look, the strong have just gotten stronger in terms of FANG names. And until we start to actually see teeth in terms of regulations, I think that's where this has an impact. I do believe this is about 5 to 7% overhang right now on tech stocks, about $20 overhang on Apple. But I think it speaks to until investors see it, they're going to think bark's worse than a bite.
When you say a 5 to 7% overhang, do you mean that they're trading at a 5 to 7% discount to what they should be trading at because of these headwinds?
Yeah, we believe it's about a 5 to 7%. You could say maybe potentially a 10% discount in terms of right now that overall antitrust overhang that we're seeing. I can tell you from an investor feedback, I've gotten more calls on this in the last 60 days than probably the last year. You're starting to see more and more of a bright spotlight. But at the end of the day, the Beltway versus big tech UFC battle, it's going to continue to play out.
Sylvia, we've certainly seen a lot of actions, and more recently actions on the state level, the local level. This is federal. This is driven by the Biden administration. So do you feel like this could have a little bit more bite?
I think it could have a little more bite. I think that there's some concern here, but what's interesting, Dan makes a great point. We actually have to see if this has teeth. And I think that there are a lot of unresolved issues, in terms of the monopoly issue. These companies are actually just sort of being targeted, I think, because of their user base. They don't have a power grid, for example, or some type of device or cost that keeps other companies from entering the space. They're simply the best at what they do, and they've grown so big, and they've gathered the largest user base. So I can see the arguments for working on privacy issues and censorship and things like that. But, breaking up big tech, I think, would be a mistake. And I think it would hold back innovation. I think it would disrupt our growth and competitive advantage with foreign markets. So, agree with Dan. I think there's a little bit of an overhang until that gets resolved.
Dan, you're mentioning the discount to what the stocks are trading at. Is there, are there things that are big tech you feel are handcuffed from doing that's preventing their true growth potential from being realized because of a regulatory overhang? Are there things that they might be doing otherwise that could actually propel their growth even higher?
Yeah, that's a great question. I think right now it's about the cloud arms race. I mean, you look what's happened with Amazon, Microsoft, Google, of course, IBM and others. I think the one that potentially is smiling here is Microsoft, because ultimately Amazon, Google, they're going to be restricted more and more from acquiring in cloud, whether it's platforms or applications. Yet Microsoft, we saw with Nuance, I think potential more M&A, they could continue to ultimately bulk up their platform. So I think if there's one area, it's in this cloud arms race that I think specifically Google, Amazon restricted more and more from M&A, and that was going to be a big part of the powder in the gun going forward.
Yeah, and yet they could also be huge beneficiaries of big Department of Defense contracts, which we did see move the stocks recently when they scrapped the JEDI contract and started this new one open to bidders. Sylvia, I'm wondering, do you think that there are some that are more exposed to regulatory risk than others, and has that changed as the view of antitrust has changed?
I think it changes depending on the day. I think if the hot topic of the week is, fairness in App Store purchases, then, Apple's on the chopping block, perhaps Google. I think if it's cloud, you get Google, Amazon out there. If it's censorship, and consumer privacy protection data, it's Facebook. So I think it just sort of changes with the direction of the wind. But, they all have potential headwinds from regulatory issues. I just hope that some of the policies that are considered are more reasonable and in line with, again, that data topic, and not so much trying to break up monopolies that don't really exist in the space.
Shepard Smith here. Thanks for watching CNBC on YouTube.